afternoon, everyone, and thank you for joining us. I'm Christina Fox, the CEO of Tech Alliance of Southwestern Ontario, a place for dreamers, innovators, and world-changing ideas. We are committed to innovative companies who are launching, scaling, and competing globally through our advisory services, our accelerator, and experiences like these with partners and participants like all of you. Before we get started, let me share a few key points. Everyone on the call is muted. All panelists will present a mini pitch, followed by a Q&A at the end of the presentations, highlighting some of the questions that came to us through the webcast registration. This webinar will be recorded and available after the call. There's a lot of detail in the slides. I've had a sneak peek, and I can tell you you're in for an incredible next 45 minutes to an hour experience with our panelists. We've all been impacted by today's economic climate, and in response, it is our collective efforts that will drive our economic recovery. Those on the panel, those of you who have joined us, we're all in this together. So of course, we are very pleased to be hosting financial relief programs for the innovation economy, bringing together community partners and industry experts to emerge stronger together. Today's session is presented in partnership with our friends at the Better Business Bureau, the St. Thomas and District Chamber of Commerce, and the Woodstock Chamber of Commerce, as well as our friends at the Sarnia-Lambton Economic Partnership, and a number of other colleagues across Southwestern Ontario. Of course, our geographic footprint at Tech Alliance expands from Sarnia, St. Thomas, Woodstock, Goderich. So we are really, really pleased to have those partners joining us today in making sure that we are emerging stronger together. Today, we are going to discuss government relief programs, options to cover your operating costs, as well as the new RRF, which is the Regional Relief Recovery Fund, for those of you who may not have been able to access existing support measures. So now I'm very pleased to introduce our panelists this morning, or this afternoon, starting with Jean-Philippe Pepin, who is the Tech VP and National Lead for BDC. He oversees their national strategy for tech entrepreneurs with funding and resources for businesses to scale. Welcome, Jean-Philippe. Also joining us is Jeff Keats, who is the District Manager Technology Team for EDC. He leads EDC's Ontario Tech team and co-leads a national strategy to support small and mid-market technology companies with working capital and risk mitigation solutions. Welcome, Jeff. Joel Adams joins us as the Senior Innovation Advisor for Innovation Canada, and Joel brings a wealth of experience in entrepreneurship, engineering, education, and advises entrepreneurs about finding funding opportunities for innovation. Welcome, Joel. And finally, we've got two of our friends from RBC, Gus Kotsiomitis, Vice President of Commercial Banking for RBC, who currently heads Royal Bank's Commercial Banking Group in London, St. Thomas, and banking relationships in the region. And of course, he's joined by his colleague, Agnes Olendrzynska, Commercial Account Manager with RBC, and she helps industries and innovative companies scale, fund their working capital, and coaches them through successful exit. Welcome, Gus. Welcome, Agnes.
Thank you.
So let's get started. Each of our panelists will spend about 3 to 4, maybe 5 minutes sharing more about the opportunities available through their organizations, and following the mini pitches, we'll shift to a Q&A. Of course, we've had a number of questions come in already with registration, so we'll do our very best to cover the questions that we've got, and then continue with any Q&A that's been dropped by you in the Q&A feature located within Zoom. So to kick things off with our first mini pitch, we've got Jean-Philippe of BDC. Over to you, Jean-Philippe.
Thank you very much, Christina. So thank you very much for the invite. I'm glad to be here with all of you this afternoon. So as you mentioned, I'm the national lead for the technology industry at BDC. What it means is that we have a team of about 40 account managers and leaders across the country, fully dedicated for the tech industry and supporting those profiles of companies in the industry. So, sorry, well, what I will do today is I'm going to try to give you some insights on, or visibility at least on 3 funding options supported directly or indirectly by BDC. But before I do that, we can go on the next slide, but I'm going to take about 30 seconds just to talk about BDC for those that don't know the organization. So BDC does, well, only working with entrepreneurs, with companies. So we do provide financing, but also equity from our VC group. And we also provide advisory service. So we support already about 60,000 companies nationally. More specifically for the tech industry, we support 3,500 companies nationally. And obviously our VC team is one of the biggest in the country, supporting close to 1,000 companies, and we have more than 1.5 billion deployed in VC. So it's been exciting. I wouldn't say like exciting in a positive way. Let's say we are quite busy with the request and trying to support as many companies as possible. Just to give you a bit of an idea of how we adjusted to the volume, but we received more requests from our online financing platform. We got more requests in 3 weeks that we typically get in a year. So to handle the volume, we had to assign temporarily 250 employees to support the online application and process, and just to make sure we respond in a timely manner. First thing we did when the crisis happened, and the first thing we did is we authorized postponements of payments on about 35,000 companies nationally. So that's about just over 55% of our portfolio for those companies that needed a bit of a breathing room in cash flow. So that was the first thing we did. We can move on to the next slide, but we also came up with some funding programs early on. But before we go in the solution itself, let's go to the next slide, please. I'd say some things entrepreneurs should have in mind, and my guess that most entrepreneurs online already went through this process. But it's important that you keep in mind to protect your core activities in your company. I'm saying that because we don't know, like it's not business as usual, like all of you know, but we don't know also how long it's gonna last. So are we in for 6 months, 8 months, 12 months, or even more? So the second priority is defining or work on different scenarios and see if you require some funding, if you have some gaps in your liquidity against your operational costs. The third step is if you see how much you need really in terms of funding. I mean, this is probably how much you should at least seek out from bankers, but also from all the available measures. My advice would be make sure you explore all the measures available out there, like the wage subsidies, the CBA account, and as such. So those programs are I'd say the cheapest way to fund your company. So before you apply for a loan, let's make sure you leverage those programs out there. So now let's go to the first program. I want to give you some visibility on the next slide. So we came in about 4 days after the beginning. On the 17th of March, we came in with this program. So it's a direct lending program to provide working capital for companies impacted by COVID. It's a working capital loan. It's very flexible in terms of payments. Obviously, here is the cash flow is everything. So protecting your cash flow during the crisis is key. So there is no capital payment for the first year. So you can get up to $2 million in working capital. We have an envelope of $5 billion for this program, but this is not grant. And also I want to clarify, this is not also equity or venture debt. So it's a term lending, so it's a term loan. So what it means is, on our side, what we try to assess is, one thing is we want to make sure to cover your costs and bridge all the operational costs for at least the next 6 months. But then at some point you need to showcase your capacity to pay back this debt, because it's a debt. It's not a grant. You need, there is a viable component to it. So before COVID, your company must showcase the capacity to borrow that amount. We understand this is a special time now, so we won't assess on your situation as of today, but we'll have a forward looking on your cash flow and see how much you really need, and can the company survive on the longer term. So that's the first program. In terms of flexibility, as I said, there is no payments for the first 12 months, but then the loan will be paid over the next 24 months. So it's not a straight linear payments. So on the first 24 months of payments, you'll pay 40% of the loan, and we keep a balloon payment in the end. So at the end of the 36 months of 60%. So no payment for 12 months, 40% of payments for 24 months, and then you have a balloon in the end of 60%. So this is available and delivered through BDC. So if you might think you're a good prospect for this, I mean, you can reach BDC, but this is really an extension of the following slide, which is the BCAP program, which is probably in terms of funding, the first thing you should have in mind. So the BCAP program is a program, it's cash flow loans, again, delivered by the financial institution like RBC. We have RBC on the call. So BDC and EDC have developed this program in collaboration with financial institution. It's a risk-sharing mindset in a sense that BDC for our co-lending program under this loan will be disbursing 80% of your loan, and the bank will actually get 20% of the risk total. So of course you need to be impacted by COVID. It's still a loan, it's not venture debt. So again, it's a term loan with regular payments. Again, the exercise of looking at your cash flow, assessing how much you really need. I mean, that's probably the first step before you go and look for this financing at your bank. But you please don't call BDC for this program. Again, this is delivered by the financial institutions. We teamed up with more than 25 financial institutions, including all the charter banks and some credit unions nationally. I know Jeff will be talking of this program, but from EDC perspective, so those two programs are stackable. So you can qualify for both of them if you have the capacity again. So let's go to the next slide. So this one is probably more aligned with the tech industry for the VC profile. So companies supported by a VC firm. So it's a convertible note program. It's a matching program as well. So what we mean with that is that if you need cash flow and you're not necessarily at this point profitable, and we understand for VC-backed companies, your main priority is most probably sales and not necessarily profitability. So that's totally fine. So if you require a bit of cash flow, you would the first step would be to speak with your investors and see if they are willing to support. If they want to support with a small equity raise or a convertible note or any type of cash flow instruments, then they can reach out to BDC and we will match that that amount. So it's a convertible note for 3 years. And in the end, the company has the options of converting this note into equity or just repay it back from their cash flow or from the existing investors. So again, you need to be impacted by COVID. Your investor should have some previous experience with BDC. You see it's delivered through qualified VC firms. But what it means really is we want to, it's all about speed here. So we want to deploy money as fast as possible. So if we can skip the due diligence part on our end, we can achieve that. So we want to work with a VC firm again that has worked with BDC previously, and we have a full trust in their due diligence. But the good news is we work with 12 out of 15 institutional investors nationally in Canada, and we work alongside 70% of VC firms as well. So most likely, if you have a VC investment, they should have previous experience with BDC. So we have developed a resource guide. So as you know, there was so many announcements, either like federal measures or provincial measures, but and they are being updated almost on a weekly or a daily basis. So it's hard to keep track of all of those programs. So on our bdc.ca webpage, you'll see we have a COVID-19 section. So this tool is a PDF file you can download for free. You don't even have to provide your email address. I mean, it's something easily available. And if you download it, you'll have the list of all the federal and provincial programs, and also a short description of the program and some of the eligibility criteria. And you also have a link to get all the details about this measure and do the application. So this is available. I highly suggest all companies online to download it and have a look, and make sure you leverage, again, those programs before applying for a loan. That's it. So this is updated on a daily basis on our webpage. So any updates will be part of it. Last thing I want to talk about is as I mentioned before, we have an advisory team supporting companies with advice and insights. So we have developed this planning toolkit for topics related to COVID. So this is free, again, on our COVID-19 webpage. So all the important topics like cash flow assessment, management, employee communications. This is all free, I'd say, advice and insights and best practice to cope with the crisis. So I highly suggest that you have a look. This is free advice again. And I think that's it. If there is any question, I know we'll have a Q&A session in the end, but I will encourage, I'm on LinkedIn, so if you want to connect and have more specific discussion about your situation, I'm more than happy to support through LinkedIn or email. So please reach out. I'm there. So thank you very much. I think that's it for me. Thank you.
Thank you very much. That was terrific. Thanks, Jean-Philippe of BDC. And next up is Jeff from EDC. Over to you, Jeff.
Thanks, Christina. Hope the volume is working okay. Sure. I'm Jeff Keats with EDC. I lead our tech team provincially, and I'm co-leading our tech strategy nationally. Today, I'll very quickly, at a very high level, go over who EDC is, what we do, how we're doing this as a result of COVID. And if we move forward to the next slide, maybe a really quick high-level snapshot of EDC. We are a Crown Corporation, much like BDC. Normally, we're looking to help companies grow and scale outside of Canada, to sell to the US, to sell to other markets. That being said, we've had a pivot because of the crisis, and we're also now working with companies that are purely domestic. That being said, we're not competing with BDC or RBC. We are actually partners with them. We look to complement what they do and work through them. And it's worth noting, everything we're talking about today keeps evolving. It's a very dynamic environment. So what we talk about now could be changed 2 weeks from now. So as we move on to the next slide, I'll talk about the 4 high-level buckets of EDC support. Today, I'll very quickly talk about some of our financing and insurance options that are relevant to companies today. And I'll not really talk about our knowledge or connections business. At a high level, the knowledge business is just free high-level information to companies to help them enter new markets, to help them scale. And we have connections programs to help connect Canadian companies to partners domestically and abroad. Now, if we want to dig a bit deeper on the next slide into one of our financing solutions, this is called our Export Guarantee Program. This is really a guarantee we provide to a Canadian bank like RBC for a loan they would then provide to a Canadian company. This could be done in a variety of structures, operating lines, term debt, SaaS facilities, and so on. Typically, the loan guarantee is between 50% to 75% of the loan amount. It is meant for the bank partners to provide lending to new clients or to increase their lending to existing customers. And it's really meant to give the banks more flexibility, allow the banks to take on a bit more risk appetite than they normally could. But it's not meant to help, for example, if a company is not bankable from a bank point of view, this will not get them there. This will just help the bank get more creative in how they provide solutions. Now, we are very active with this program, but on the next slide, I'll talk about our BCAP program, which is an offshoot of that loan guarantee. This is still a loan guarantee program, but this is a result of COVID. And this is a program where we're having a higher guarantee percentage than usual. We're doing an 80% guarantee. These are for loans meant to help companies battle through the crisis. So if your liquidity has been impacted, your sales are dropping, or for whatever reason, you need extra financing support, this is a tool we're providing to the banks for them to consider using. It doesn't have the same flexibility as our traditional guarantee, but it's more streamlined. So it's a lot faster. There's no need for EDC to approve or adjudicate the credit. So this is meant to allow the banks to get money out the door faster. We're taking on more risk, but there's a defined sandbox related to COVID. Worth noting, again, this is also eligible for not just exporting companies, not just companies that have sales outside of Canada, but also companies that are purely domestic. So that is another financing solution. On the next slide, I'll also talk about another solution under our kind of financing umbrella, if you will. This is another guarantee to the bank partners. However, it's not a guarantee for loans. This is a guarantee for trade instruments that a bank would provide. So a guarantee for things like a standby letter of credit or a foreign exchange facility. We're seeing this in the tech space for things like landlord lease bonds, performance bonds, if you have a hardware component for supplier bonds. And what this does is it's 100% guarantee to replace the bank's need to take collateral in those cases. So it's meant to kind of free up working capital for companies. So it's another tool to consider. Now, if we move on to the next slide, I'll talk about one of our insurance offerings, which is called credits insurance. You might also know it as accounts receivable insurance. So this is insurance on your accounts receivable. It's for 90% of the value, and it covers companies against buyer non-payment, buyer bankruptcy or insolvency, contract cancellation. So it really is a risk mitigation tool. But we're also seeing companies use this as a sales tool because it allows you to get more comfortable offering payment terms to new buyers. And also it's a financing tool because if you have this insurance, it may increase the amount of financing that you can get from a lender. This could be structured in a lot of different ways. This could be for all of your sales. It could be for just one buyer. It could be for, if you're exporting goods, services, if you're a software provider. Large companies like Shopify use this, but we've also done this with companies for their first or second sale. They've insured the receivables. So a lot of different ways this program is being used. And much like BDC, getting lots of requests, we've been getting 6 to 10 times normal requests for this program as companies look to mitigate risks. Now, if we move on, I'll talk a little bit about on the next slide very quickly some of the other changes we're making. The Coles Notes version of this is we are basically providing payment deferrals. We're increasing our risk limits and risk appetite. We are being more flexible and we are streamlining our program. So for a lot of the programs we have in-house, we're just trying to make it easier and faster to work with. Now, a couple things to think about on the next slide, a couple of other programs to highlight. This is just kind of the tip of the iceberg. We have a lot of other programs with partners like RBC, BDC, Trade Commissioner Service. So this is just kind of to give you a high-level overview. We also keep evolving our program. So in the coming weeks, we're launching another BCAP solution aimed towards larger companies. And we also have an investments arm. It's separate from the team I'm part of. We typically in an investments team, they invest Series B and later. There's typically a partner VC with them. They are piloting a matching program for investments up to $5 million right now. That's through qualified venture capital or PE firms. And we're asking companies to talk to their existing investors right now to see if they qualify. And then on my last slide, just a couple of things to keep in mind. Very important to be proactive and reach out to all of your partners, have those discussions, going through your bank or your credit union for BCAP because it'll be different a little bit by bank, and realizing it's not one size fits all. There's a lot of solutions out there. So please do, stay on top of them by following our social presence, our websites, BDC, RBC, and so on. And please do reach out to discuss your needs. That's it for me, Christina.
Amazing. Thank you, Jeff. I really appreciate the detail. And next, we're going to move to Joel from Innovation Canada. Over to you, Joel.
All right, thanks for having me, Christina and Victoria and Sarah and the team at Tech Alliance. So Innovation Canada is part of the Innovation, Science and Economic Development Department at the Government of Canada. You may remember it as Industry Canada. And Innovation Canada, as a component of that, offers a whole number of programs, things like the superclusters, the Strategic Innovation Fund for large-scale support, and programs like Innovation Solutions Canada, which has challenges that companies and even individuals can respond to with unproven products that the Government of Canada actually acts as a buyer for. So it's a great way to seed your company's sales. So these are some of the programs that we provide, but I'm going to focus on one program today. And so in addition to programs offered directly through Innovation Canada, we have over 70 partners at different levels of government, and together we provide somewhere in the neighborhood of about 2,000 different programs. Some are advisory, but many of them are funding programs. So like Jeff mentioned before, don't just look for one source. There's lots of different opportunities out there. that are different depending on the circumstances of your company. Are you a tech company? Are you a scale-up? Are you a startup? Are you a restaurant? There's different organizations and different programs that can help you. And something I just want to mention as well is, in addition to relief and recovery, there's still a lot of programs out there for companies that are continuing to grow, and in some cases grow even better during this COVID period. And Canada is continuing to invest in and support companies of that nature. So important to remember that. It's not all about relief and recovery, which is important, but we continue to have a lot of focus on growth. So how do you navigate all these programs? Really across the government of Canada, there's two ways to help you get through these 1,000 programs, 70 of which are focused on COVID relief and recovery. One of those avenues are innovation advisors like myself. So my office is in Toronto, but I live and support Southwestern Ontario. I live here in London, and we have a network of innovation advisors like myself across the country, and we focus on high growth scale-up companies. We talk to startups, we'll talk to other companies, but we provide a hands-on service for companies that are, the future unicorns of Canada, or narwhals, as some people call it, as well as other companies that are experiencing rapid growth. But beyond that, before you're ready to kind of move into that high growth stage, the other service that we provide at Innovation Canada for all businesses of all types is innovation.canada.ca. So if after listening to a bunch of webinars like this, you're still not sure where to start, you're getting a bit lost in the maze of acronyms and different programs, head to innovation.canada.ca, fill out a bit of information, as much or as little as you want about your business, and it will provide a list of tailored suggestions that may help you to narrow down the best opportunities. Included within that is over 70 COVID-19 programs, and more are added every day. So I've talked about how we support growth in general across a number of different programs, how to narrow down options for your own type of business, but I'm going to focus the rest of my time here on the Regional Relief and Recovery Program that is being offered in Southern Ontario through FedDev, as well as through the Community Futures Development Corporations if you're based in a rural community. And I know one of the questions already was, are the loans interest-free? In this case, these loans are. So the RRRF, or the Regional Relief and Recovery Fund, provides interest-free loans for a multi-year period, and I'll get to some of the additional eligibility, but these are more widely eligible than some of the other programs that have been offered at the beginning of COVID. You need to be an incorporated business, so unlike programs like the new phase of SEBA, you need to be incorporated. It covers fixed operational costs. So this is meant very much to keep your business intact over the next period and cover off some of those fixed operational costs you've already incurred, but perhaps without offsetting revenues. But it's not meant to cover expansion and growth. There's other programs for that. Part of this program is that you must have first applied to other relief programs if they exist, if you're eligible for them. Doesn't mean that you have to have received them. And if you do receive them, it doesn't mean that you're ineligible, but we need to know that you've already had a look at some of the other programs and applied for them where it makes sense. Your business needs to be viable before COVID. If you were about to go out of business and you're looking for a bailout, this is not the program for you. And you need to have a plan to continue to business afterwards. This is not to settle things up and close it down. This is to hold you over so that you can then continue to grow and build your business as we go forward. So what's eligible? These are some examples. I won't go through all of them, but we can cover costs or a portion of costs related to things like lease payments for equipment, office expenses. We can cover wages if they've not already been covered through some of the other programs. We can cover insurance and bank charges, property taxes, rent, again, if it's not already covered off by another program. But we can't pay your mortgage. We can't pay for additional growth. We can't pay for non-cash expenses and some other things as well. So there's a good range of eligible expenses, but not everything falls into that category. And then I'll speak about two options within the RRRF. So one option is very similar to the SEBA program, the Canadian loans available up to $40,000. Some of you may have already applied and received these. If you haven't, or you were found ineligible because maybe your revenues didn't go down by the required amount, or you weren't the right size of business, you can apply for this program and receive a similar $40,000 interest-free loan that you do not need to start paying back until 2023. So you have a good runway to be able to not worry about this loan, but you will need to pay it back in the future. If you haven't already received SEBA, you may be eligible for up to 25% of that $40,000 loan to be forgiven, in which case you get the $10,000 you get to keep, and you just need to pay back the additional $30,000. This happens if you've already paid off the full amount before you need to start paying back your principal payments. So option 2 is probably the option that a lot of people on the call may be most interested in, as either a tech startup or a scale-up company, or possibly a manufacturer. These are some of the targeted areas for this program that weren't necessarily well covered by some of the other programs that we put out there. That's why we created this. In this case, you can get up to $500,000, depending on your revenues or status as a business. All of the loans in this case are 100% repayable. You don't get the $10,000 potential relief, but it is interest-free, and you don't need to start paying back any money until 2023. So it can be significant support for a lot of businesses. It's based on revenue. You'll see that down here at the bottom of the screen. If you're less than $1 million, you're only eligible for up to $50,000. If you are $5 million or over, you could be eligible for $500,000 in interest-free loans. For a pre-revenue company, and this means a company that's a startup that has not had significant sales revenues. You may have had some revenues booked in terms of grants. Maybe it's interest on your venture funding, that type of thing. In this case, you're eligible for up to $250,000. So how do you apply? There's a big, long website here, and Tech Alliance will be sharing those links. But if you forget that and you misplace your links, just look at innovation.canada.ca and you should be able to find this program quite easily. I do want to let you know, make sure your application is complete. Financial statements are required, but they do not necessarily need to be externally prepared or audited. If you're a new startup opened in the last few months, interim statements are sufficient. We'll need to see your articles of incorporation to prove that you are a corporate body. And we need a signed officer certificate, which is not your incorporation documents or amendments. This is actually a special form on the FedDev website that you need to fill out and sign. And this has confused some people. So make sure you find that form on the website and sign it in order to be complete. And finally, I already mentioned that pre-revenue companies are eligible. You don't necessarily, are not necessarily ineligible because you've had some revenues. Some may be allowed, but the expectation is you've had some level of investment, venture capital investment, or even a wealthy angel investor, accelerator funding, business plan competition funding. All of these things may help qualify you for this. And that's it.
That's terrific. Thanks so much, Joel. Lots of detail there and a couple of links that are going to be really helpful. Thanks for clearing up some of the information about RRF. And from here, we're going to shift it over to Gus and Agnes from RBC. Over to you.
Hey, good afternoon, everybody. Thanks, Christina. First of all, I'd like to recognize Tech Alliance for the key role Tech Alliance plays in our tech community. Thank you on behalf of all entrepreneurs. Thank you on behalf of all our partners. And thank you for the invitation this afternoon, and to everyone else taking part in this webinar, thank you for all you do as well. Partnership is key in these times, as it is always. Our RBC, we've had a commitment to the innovation economy since the early 1990s, and this continues today with industry specialized advisors, credit risk managers, and many others. There has been extraordinary times, these have been extraordinary times for all of our business leaders. You have been tested in ways you would not have imagined. Many of you are in different places, as we heard during this crisis. But what you all share in common is there's still an uncertain road ahead. You wonder what this means for the future of your business. But one of the things for sure, as you've heard this afternoon, all of us at RBC, everybody on the line here, and all the financial institutions are here to help. Before I discuss some of the bank's relief initiatives and government programs that you've heard a little bit about already, like all of us at RBC, clearly, first and most importantly, knowing that the safety and wellness of your employees and your clients is of paramount importance. And as you look to set your reemergence plans, which is coming up very shortly if it hasn't already, employee care and safety and security is paramount. There are good resources to support you, as we heard, with the federal and provincial government sites. Tech Alliance site has some awesome resources on all the bank sites. As you look to reemerge, we can help you in the area as well. To that end, we are pleased to offer all RBC clients a 60-day free subscription to Wello. You see it here on your screen. For those that don't know what Wello is, it is a telemedicine platform that gives you and your employees 24/7 access to healthcare practitioners by phone, video, and secure messaging. This resource can help us all cope with the new normal, which is leading to tremendous strain on health and well-being. More information is available on the site here or by contacting one of our advisors for more details. While the current environment is incredibly disrupted, also opening up new opportunities, and we've heard a little bit about that already. It opens up opportunities for growth due to changing consumer patterns that we've all experienced and habits, resulting in the increased digitization of our business. We're more than happy to help you think through all of that. And in particular, we can help you in what we call the investments we made beyond banking. With various investments and partnerships we made, such as Go Digital and other technology investments such as Inside Edge, all of this is to assist you by streamlining, digitizing your financial operations and cash management for speed, efficiency, and security. You need to do that as you reemerge in this economy. Early in the crisis, we provided various solutions, and I'm not going to get into details on this because you've heard a little bit about it already, from business loan payment referrals early on to increased operating lines, credit card minimum payments, and waive fees for cash management solutions. These were key in the foundation as we started to connect and assist our entrepreneurs to move their businesses forward. As we've heard already this afternoon, the federal government then started announcing various programs totaling over $200 billion in support. First of all, and the biggest one, was the Canadian Emergency Wage Subsidy. This is the largest subsidy program, which was launched in late March and was recently extended to the end of August. Earlier this week, through the CMHC, the Canadian Emergency Commercial Rent Assistance Program was launched. Previously, tax payment deferrals were implemented, and the Work Share program was extended to 78 weeks. Team, all of these programs are geared to keep employees working and businesses staying open. That's the foundation of what we're all talking to you about this afternoon. Together with the federal government, the bank administered early on the Canadian Emergency Business Account, as CEBA, as you heard from Joel and others. Of the 600,000 plus accounts that were funded across Canada, our RBC, we funded 130,000, or roughly 22% of those. And we did that in record time, in less than 2 weeks. And we processed all of those, almost all of them, 99%, right, with no manual intervention. That is unheard of. These exceeded the number of loans that we processed for the entire 2019 calendar year, and we did it in 2 weeks. As you heard earlier, in the last 2 or 3 weeks, we partnered with wonderful partners with BDC and EDC to support the Business Credit Availability Program, or BCAP, as you heard. These are loans for up to 5 years to support medium and large businesses, up to approximately $6 million, with payment over 5 years, interest only for the first year. Before I turn to my partner, Agnes, Olendrzynska, our KBI commercial account manager in this market, to outline how we're working with our clients to support them in applying for these BCAP loans, I would be remiss if I didn't point you to our various great resources that we have on RBC. RBC.com, you'll find a lot of entrepreneur type resources in a lot of areas around COVID. So thank you again for the opportunity, and now over to you, Agnes. Thanks.
Thanks. We can go to the next slide. Hey, everyone. I wanted to focus on some key takeaways for you, the entrepreneurs, to help your banker to be able to provide you the capital you need. There's 3 key items we recommend you gather before you speak to your banker. First are cash flow projections. It's vital that you're looking to the future and projecting your cash flows for at least the next 6 to 12 months. We have a great cash flow forecasting tool that will be sent out as a resource following this call. It'll help you predict any cash flow gaps and help you articulate what your true credit need is to your banker. The second piece is up-to-date financial statements. Any banker will want to see the business, how the business has performed over the last few months. Make sure your internal financial statements are input and accurate up at least till March or April, as well as your fiscal 2019 year-end statements. Get them to your accountant as soon as possible. Banks are going to be looking to 2019 to see what your new or your previous normal for the company looked like. Finally, the third piece is your COVID business strategy. Your banker will want to understand what financial impact the COVID shutdown has had on your business. How many employees have you had to lay off? How much sales have dropped? But also, how has your business innovated during this time? Have you taken advantage of any growth opportunities? Your business strategy throughout this time is really the story behind the financial statements and the numbers, and your banker is going to want to hear that. Whether your business is growing or has hit a rough patch during this time, if you have any questions, feel free to reach out to Gus or I. Christina, back to you.
Terrific. Thank you very much. That was really awesome. Thanks, Agnes. Thanks, Gus. And so now begins the portion of Q&A. I'm just going to acknowledge to those of you who are on the call that we're at 1:45, and for some of you who have competing priorities, feel free to step away. And maybe I'll offer my first thanks to all of our panelists for your investment of time and your detail today. And for those of you who are able to join us to the top of the hour, I invite you to stay on. We'll probably take about another 10 or 15 minutes for some of the questions that we received. And so Agnes, you're in the hot seat first. The first question is for you. And it looks like it's a two-parter question, of which I think one part has been answered. So it starts with, would a past bad credit record disqualify an applicant from accessing the Canadian Emergency Business Account, and is the application through the bank?
Yeah, so the Canadian Emergency Business Account, or the CEBA, is online at RBC, so it's all through online banking. There is no credit check that's done. It is based on the business, and it is an online application. So the qualifications that were set by the government were set up in our online platform. If you can apply, like Gus said, 99% of the time, it's done all online and approved. So no credit check is done on the business for that one.
Okay, thank you. That's really terrific. So Joel, the next one is for you, and it's a detailed one. And I imagine that there's probably similar scenarios in other organizations, tech startup or otherwise. So the question is, I am a small medium enterprise who employs 2 part-timers, temporarily closed due to COVID. I also work 20 hours weekly elsewhere, earning more than $1,000 monthly. So the question, the person suggests they're not eligible for CERB or CEBA, as their payroll is less than 20 grand. Would I be eligible for the triple RF funding program? So I feel like I just put a grade 8 word problem from a math textbook in front of you with all those details. I'm happy to repeat any of that detail, Joel. 2 part-timers, temporarily closed. They work 20 hours a week. They've got $1,000 income. And can they qualify for regional, the RFF fund?
Yeah, so the great news is it depends. But it doesn't make you ineligible. So it might be dependent on other things about your business, but unlike the other programs, the triple RF was created to cover off some of the gaps in the other programs' funding. So a company who doesn't have any wages at all, but is incorporated, maybe has limited revenues, might still qualify for funding under the program.
Okay. Jean-Philippe, this question is for you, although it does ring a familiar bell. I have the grand opportunity to see some of the questions that are coming in through the Q&A function below in Zoom. And so I'm not sure if this question has already been answered by one of the panelists. If it has, terrific. Jean-Philippe, I'm just going to ask you anyhow. So it comes in, for a product that is in ideation stage that tackles loneliness in elderly and the youth, do you have any recommendations for funding, capital, and how to best position my proposal to take advantage of all of these programs? So there's a lot there. So we'll start with you, Jean-Philippe, and if there's anyone else that wants to jump in, I will open up the floor.
Yeah, it's a good question. So it's in a startup phase, I'd say pre-revenue. So those program we have to support during COVID, I mean, the one that is delivered directly through BDC, the company must showcase some track record and sales. So that's probably not a good fit because we need to assess the capacity again of paying back this debt. So it's too early for this program. But there is other programs like the RFFF is probably RRFF, sorry, is probably one of the good one, I'd say. But also, you know, the Futurepreneur is still available for young entrepreneurs to get up to 60,000. I wish it would be 60 million, but 60,000. And Community Futures is still available. We still, I say, if I go outside of this question, but startups overall, if you have at least 12 months of operations, you can apply online at BDC. So you don't need to have this amazing, great track record, but at least if you have 12 months of operation, you could qualify online. So that's my answer for that one. I don't know if that answered the question, but I guess a bit, hopefully.
Yeah, that's a great start. Does anyone else from the panel want to jump in on that? I think it's a pretty regular scenario where we have early stage startup that are pre-revenue, you know, may have opened the doors in October, potentially are pivoting their businesses based on market demand. If you want to take that scenario and the one I just pitched, is there anything more, Joel or Agnes or Jeff, that you want to jump in on that particular question? Okay, and seeing
just
none.
for me, definitely we are funding companies in that scenario. So
okay.
It'll depend on the circumstances, but some are being funded in that case.
Okay, so maybe the best answer would be to visit Innovation Canada and maybe go through some of that assessment and then reach out to yourself and members of your team. Would that be a good way of helping to assess that?
Yep, absolutely. And go look at the triple RF application guide and fill it out and submit. Get it in early.
Okay, sounds good. Thanks, Joel. Thanks, Jean-Philippe. So Jeff, this question is for you. What recommendation do you have for finding investment partners willing to join a partnership in really specific aircraft composites manufacturing business in Southern Ontario? I know a bit of background because I saw the question more fully, and this is a company that is first out of the States and looking to come to Canada, particularly London, Ontario, has had some investment in first round and is looking to expand. So that's a bit of the background. I'll repeat the question. What recommendation do you have for finding investment partners willing to join a partnership in aircraft composites manufacturing business in Southern Ontario?
Yeah, it's a good question. It'll probably depend on the specifics, but you know, there's groups like Invest in Ontario that are helping U.S. Companies and investors come in. But I'd say also have those discussions with EDC. So feel free to reach out to me after to see exactly what type of partnership you're looking for, what type of business is already established in the U.S. And you know, we'll see which partners we have as well in market we could connect you with. So I'd say the first thing is just a conversation to understand better, and then to see which partners in the ecosystem, including potentially even if you know if BDC or Joel and the team or even RBC have some ideas. But happy to have that connection. So please feel free to share my contact details with all the participants today.
You bet. Thanks, Jeff. So just call out to those of you who are on the line. If you have some questions that are specific to each one of our panelists, feel free to drop them in there. I think we've got 6 or 7 in now. I'll just shift to one other question that we had in advance, and I think it's been answered, Joel, but if you've received the Canada Emergency Business Account, CEBA loan, are you still eligible for the triple RF loan?
Yeah, it's an important question. Yes, you are. So in fact, we would like to see that you have applied for programs like that, if eligible, before coming to the triple RF. But just because you've gotten money there doesn't mean you can't apply again. And if you haven't heard yet, don't wait, apply for both. We'd rather see those applications early when we can help you than later when it might be too late.
Okay, that's terrific. Thank you. So this next question I would say is both for Agnes and Jean-Philippe. For businesses that need cash flow in the short term, what considerations should SMEs take into account before applying for the subsidies like CEWS?
Sure. So I can take a stab at that. So I think understanding kind of those 3 items that I mentioned, to understanding first what is your true need. So projecting your cash flows out, being able to articulate that very clearly. If you are going to apply for any of the loan programs, I think understanding what amount is first and paramount. But applying for the CEWS, the wage subsidy, first is obviously the cheaper route to go. But when looking at some of the loan programs, being able to articulate your plans and your projections is a big component. John, do you have anything to add?
Yeah, I think that's a great answer. I'd say the same. Like the beginning of my presentation, I was talking the importance of working on different scenarios. So on your cash flow analysis, like plan for 6 months, but what if it's 12 months? So you need to be prepared for that. And we rather have the information now and try to find solutions, BDC, but also partnering up with other financial institutions to cover the whole need for the longer term. It's better to start in doing it now. So, but again, let's make sure you cover SIBA. SIBA is a quick win, or RRRF, or all the wage subsidies, all the program with no interest. I mean, those should be your first things you explore.
And is it possible to put in an application for both BDC and EDC? Jean-Philippe, do you want to start there? And I'll maybe you've got the answer. Maybe Jeff can jump in as well.
Yeah, well, in both situations, you need to apply through your financial institution. If you're an RBC client, you would contact your account manager. And it's the account manager that would triage which program is probably the best for your company, but those are stackable at the same time. So you might qualify, let's say, for a line of credit, you get the EDC guarantee, and then if you would qualify also for a cash flow loan, maybe the co-lending with BDC would be a good second options, or both of them together. So those programs are stackable.
Okay.
Yeah, exactly. You can mix and match. I just jump on what JP is saying, where you can use EDC and BDC, those B caps, but maybe you're going to be working with a bank and BDC, working with RBC and BDC on the BDC B cap, and maybe the traditional EDC loan guarantee with RBC, for example. It's not kind of one or the, like. There's so many different solutions you can customize depending on your needs. So I think the most important thing is to have that information ready. Talk to folks like Agnes, myself, JP, and figure out what is best for your specific needs.
Okay.
But we don't expect. I think from the banker perspective, I'm not sure they expect you to be able to say I need the BDC or the EDC. I mean, that's probably more of the role of the account manager at the RBC or any other financial institution.
Exactly. We'll be able to assess what makes sense and what combination, because like you were mentioning, doing traditional lending, if it makes sense, is also an option too. Whether there's a property or just a regular line of credit, there's opportunities for us to do a plethora of things.
Okay. I like that. That was sort of a trifecta approach to that answer. Thank you for everybody jumping in. I've got another question that's coming in from the Q&A function below, and it says, in the near term, our company has reasonable runway in terms of cash position. Can these programs be applied for later in the COVID recovery phase? And I can tell you, there's a lot. This question comes in very regularly through our client companies about, having gratitude for right now and the support that's offered right now. What does it look like in the future? So if they're in a positive cash flow position, can they be applied further out? Who would like to take that one on?
Yeah, I can take it. I can start at least, but it's good news that the company has some cash flow. And my guess, though, the cash flow was not to go for COVID. That cash flow was probably more for any growth plan or strategies. So again, I guess for the COVID fixed costs, all the costs for the next 6 to 12 months should be covered through a financing, and then keep your cash flow. If it's longer than expected, then you have some kind of a protection there and say security net, I'd say, or keep that liquidity for after COVID to start, continue growing and going back to the new normal.
Okay. Anybody want to add to that?
Yeah,
Logistically,
go ahead.
This might just be how RBC's current folios have articulated it, but our advances right now are approved until the end of February 2021. That means if we approve a loan today, we'd like it advanced by February of next year. But that's the current situation. With everything changing, that date might also change.
And I'd say for the EDC B cap, the current availability to have kind of gone through and applied through the bank is by the end of September. It's very dynamic right now, so that could change. But again, I encourage companies to be proactive. So figure out what your cash flow needs are now, but also 6 months from now. And then again, talk to the team like Agnes or JP and see what could work for you.
Okay, I'm recognizing that we're at 1 minute left to the hour. So I'm going to ask one more question, and then I'll certainly follow up with some of our thank yous. So it's a question that's related to a tech startup creating data collecting software. So that's their innovation with no VC funding. They're self-funded. They have 4 partners and 6 consultants. and they're concerned that there are no funds yet for them that they qualify for. Knowing that information and self-funded, no VC, and for partners, what recommendations do you give to this company? Jeff, do you want to kick it off?
Yeah, I guess it depends what they're looking for, right? So if they're looking for some of the grant programs that are out there, to look at those, to explore the RRF, but also, are they currently engaged in sales? Are they commercialized? If so, maybe there's something that we can do through BDC, RBC, EDC. So the devil's in the details, but I'd say to explore those different options. But if there's grant money they are eligible for, to go for the grant money first, but to have those conversations with all your partners in the ecosystem.
Okay. And Joel, can I ask you to tip in on this one too?
Yeah, it's a tough one. My first response is work with Tech Alliance and help to kind of walk you through some of this. But I would say with no VC funding and being self-funded, it's a good thing. You're bootstrapping, you're holding on to equity, but you may preclude you from eligibility from some of the programs. In some cases, you may still be able to apply to something like RRF, even if you don't have revenues. And we may look at that self-funding as a form of angel investment. So don't rule it out, but it may put it as a borderline case.
Okay, well, thank you. So this is at the point where I know that we have put a lot of incredible panelists on this call today in the interest of trying to get as much information to those who are navigating. And I know that there are a lot of questions that are still left in the Q&A section. Certainly our apologies. I think that the detail that was provided today by the panelists is just extraordinary. It feels like we've been able to bring you into an experience where you're able to ask a number of questions and hear from the panelists, and then be able to, take those details and compare and determine what's best for you and your company. So I want to offer my sincere thanks to each of our panelists for your expertise today and the preparation that you did to come on and be able to do a pitch in 3 to 4 minutes and be in the hot seat for questions. And I also want to thank our community partners who supported the delivery of this experience into a wider community experiences. So through our friends at the Better Business Bureau, St. Thomas District Chamber of Commerce, Woodstock Chamber of Commerce, and Sarnia Lambton Economic Partnership. And of course, all of our colleagues across Southwestern Ontario and economic development offices, funding partners, etc., who helped to deliver this experience online. And for those of you on the call, I certainly encourage you to continue to focus on resiliency, tap into the resources. The contact information will be there and available for you. And together as a community, we will continue to thrive. We will support one another in coming through on the other side of this pandemic with an emerging strength. So remember, of course, our venture growth and corporate innovation advisors at Tech Alliance are here to support you as well as our advisors within each of our planning partners for today's experience. That's it for today. Have an incredible day, everybody. Stay safe, stay healthy, and take good care.